So, ladies and gentlemen, this will be a lot of fun. This is one of my favorite areas to actually talk about. And this is, for Adam, me and Adam have known each other for some time now. And, for someone that's across pretty much every different aspect in Web3, I think it's a great opportunity to sort of pick his brain as far as what he's seeing. And then also, I suppose I'll share some of my high level thoughts from a starting point, and then we'll sort of get into I'll just turn this around, and then I'll get into the question part. And by the way, at some stage, we may even throw over some questions if you want to ask Adam as well. So what I love about this Web3 conversation, I started off the day with talking about what I love about innovation. And innovation has a simple trajectory, right? And it says typically, even though you see that S adoption curve and it goes through its 4 different phases, the other part to that trajectory is that the first component is that Web3 innovation will match where the current incumbent is at. And then the second stage from that is that it will then accelerate beyond it. And what I love is, a lot of people think, oh, I've missed out on crypto, I've missed out on Bitcoin. But the reality is it's only got 8% adoption. And obviously, Dubai's done such an incredible job at adopting sort of entrepreneurship, innovation, regulation, etc., and attracting some of the smartest brains sort of to the region. So in this conversation, I want to sort of make it pretty wide ranging across the whole area. And, hopefully it sort of helps give some insights. And, I suppose, and this is the way we always think about things. We never tell anyone what to invest in. But the thing that we always want is we hope people walk away with their own investment thesis updated or a nuance added to it or something removed or at least added value in some way. So Adam, from a starting point, just give a quick sort of 1 minute again about your background for those that may have missed it beforehand, and then we'll go into the Q&A.
So my background, TradFi guy. For those who don't know TradFi, that's a Web3 term for boring banker doing stuff the old way. So I spent 20 plus years in a lot of banks, starting from Quarry, Nomura, Barclays, Credit Suisse, HSBC, DBS, ANZ, a whole bunch of them, always in trading technology, regulatory capital, risk management, payment attribution, rogue trading, those sorts of spaces. Really looking at how we manage quantitative risk, market risk, looking at things like credit securitization through the 2000s in the GFC, as the Australians call it, and really that whole wave of growing up in the investment banking industry. So we saw banks come and go, banks get split in half, strategies change, moving a real de-risking or a movement of quantitative risk out of the banking system. All those clever PhDs then went to social media and built Facebook's ad exchange and all the AI stuff. And I guess I followed a similar track, took on a role at DBS Bank in Singapore, co-headed their AI technology department for a number of years. Huge program, pre-Gen AI, but really around the start of how to democratize AI and embed that within the workplace. So my background's very much always been in quantitative and transformational technology.
Perfect. Now, you've just been at Token 2049. I'd love to understand, like, just from all the different conversations you've had there, the panel sessions you had, the engagement you had, what were some of the key takeaways for you as far as what the sentiment is and what the investment thesis people have at the moment and what areas people are looking at?
That's a really tough question. Couple of key takeaways were that maybe I sold too early, and there are a lot of people that are driving Lamborghinis and Rolls Royces around that have held on or had a token. I think there's a lot of those have been quick and dirty money as well, which I guess gives a bit of a tarnished reputation on crypto or the blockchain industry. And I think those are the sorts of things that, if I look at not just this week, but the trend of these conferences over the last couple of years, every year this title sponsor board is different names. And when we started out in crypto, one of our business partners would flippantly say to the VC when they do the usual "where do you see yourself in 5 years" question, is still around. And that's been a big theme the last 3 years, is enormous number of projects that have been very successful and enormous number of projects that have had really expensive booze and fancy parties that don't exist anymore. So I think we're really in that stage of It's just starting to settle down from where people had maybe great ideas or are blatantly in there for a pump and dump. We saw one only 2 weeks ago, and I spoke to someone who knows one of the people that were in that project, and their strategy 3 years ago was, we're going to pump it and we're going to dump it. These sorts of things really make an industry difficult, the broader industry, to get credibility and traction. And I think key takeaway from the last week is that that conversation is starting to go away, and people are starting to get to, I guess, where our end hypothesis is that no one actually cares about blockchain. It's so ubiquitous that no one's even talking about it. But there's going to be a lot of pain and a lot of disruption on the way, and that's where the conversations are at the moment.
And from a, when you're thinking about sort of DeFi as an area, what have been some of, I suppose, the key trends that have emerged over the last 12 months that investors should be aware about or should be thinking about?
Risk management, really key one. And again, being the boring TradFi guy, we started our business with a risk management first approach, independent custody, proof of assets, no rehypothecation, as in trading of other clients' assets for your own purposes, institutional grade technologies, hacking, we saw the Bybit hack. So when you trust your money to a protocol, you're giving your money to, and it's decentralized. This is the whole point, the whole idea of the industry, is that there's no middleman. But with a middleman, there's some level of trust, and I guess that's the incumbent challenge, that people trust bankers, rightly or wrongly. But at least there's someone you can go to if something goes wrong. So
I think the words people typically use, at least you got someone to sue if it goes wrong.
point, very good point. But in decentralized and DeFi protocols, you don't. So once it's gone, it's gone. There's no way you can get it back. So that requires a whole different way to approach your own risk management, both technically, but also financial risk management. So really understanding what protocols you have, what you're invested in, and there's a lot of innovation to try and unlock more secure yielding protocols, things like restaking it or using Bitcoin. People try and unlock utility out of Bitcoin and build ecosystems over that, as opposed to other altcoins which have a much higher risk profile.
In your talk, you mentioned about you guys sort of launching your own stable coin. I was fascinated to know that I think it was Kathy Wood that mentioned it, that basically one of the stable coin volume now is actually greater than, I think, Visa and MasterCard from a volume perspective. And that blew me away because I had no idea there was that level of volume going through. What's your thoughts on sort of I suppose, the opportunities for investors in the stable coin area?
Yeah, so good point on the MasterCard and Visa. I think it was only last week MasterCard announced a partnership with, I think it was Tether and Circle, but essentially having a stablecoin backed payment rail. So they're obviously taking it very seriously. I think another interesting stat, and again, it's not quite my area, but Tether is one of the top holders of US Treasuries. So with the AUM that they have, it's effectively a cash management fund. You have to prove that you have those assets. Those assets have to go somewhere. They are a huge holder, if not one of the top 5 or 10 private holders of US Treasuries.
So and also have one of the largest amounts of revenue per employee as well, profit per employee as well.
It's absolutely staggering. Yeah. But if you think about starting to look at, I guess, systemic involvement of the digital asset sector in payments, and the importance of stablecoin is that Tether holding that cash, the government has to think quite seriously about how they manage Tether as an institution and the distribution of stablecoin and its usage in the global economy, because they are in some ways bankrolling a significant part of US debt, which starts to say, okay, well, these are now a systemically important organization. How do they fit into monetary supply?
And you guys have obviously been looking at the tokenization of real world and physical assets. I've seen that around now since, I think, 2018. It's been a conversation, but it seems that once they rebranded the acronym to RWA, it seemed to get a lot more sort of hype and steam about it. Where does sort of the tokenization of physical assets and even potentially the tokenization of debt, Where does that stand in like where is that currently at, and what do you sort of foresee as the opportunities for investors going forward?
I think there are enormous opportunities, and really why I got into digital assets in the first place was not to speculate on random token projects. I think there's enormous opportunities that changes the way that companies that have real utility and real business proposition can access capital and can share returns with the token holders without complexities of debt and equity. So there is a real place for tokens in a corporate structure. Um, and it's just a better way to think about the tokenomics is that it's a different part of the cap structure. So in that way, tokens for real projects can become real world assets, albeit not securities. But that's kind of where we're at the moment. And RWA is a bit of a tricky one where most of the traction we've seen at the moment is in stablecoin and treasury because it's effectively a settlement rail for trading crypto. Where it needs to get to, and one of the projects we've done ourselves is tokenizing gold and silver. It's become quite popular now. So just fractional ownership for real world assets. So a good use case was in Indonesia, where they had physical gold ATMs. So people would deposit their cash and get gold nuggets or gold coins. Logistic nightmare and security nightmare across a country such as Indonesia. So looking at deploying tokenized gold, it's just a digital version. It's still an asset-backed token, a really good way to, I guess, de-risk sovereign risk. You've seen, I think it was Kazakhstan, Kyrgyzstan, some of the Eastern Bloc countries have started doing tokenized gold as part of their strategic reserve. Ecuador, El Salvador.
Australia's done it as well, hasn't it, through the Perth Mint?
Yes, yep. So we're involved in their competitor, but that project died. The Perth Mint one for different reasons, but yeah, it's definitely there. Where we are looking more strategically is in private credit. Australia is a great market for private credit. It's about $400 billion of mortgages done, non-bank mortgages done each year on spreadsheets. So for us, it's a technology play. That's what blockchain is. It's just a really good technology for transactional systems.
And the other ones I'd mention is that we've seen a lot of in Australia. We've also seen a lot of tokenization of real estate as well coming down. There's basically platforms that have been built up to do that. They're doing that with agriculture, land, real estate, and then also the other one. Just trying to think. Anyway, for me when I think about the sort of tokenization of real world assets, I just think about it really simply. Markets move towards efficiencies. Markets move towards things that basically simplify and make a transaction more efficient. Typically in funds management, there's actually nothing that's efficient about a funds management process, whether it be KYC, whether it be the administration or funds management of a transaction or of a deal. So it absolutely makes sense to me that going forward, and like you said, blockchain becoming irrelevant, I can imagine there's a lot more sort of funds management solutions that utilizing sort of blockchain technology sort of behind the scenes, facilitating some of these transactions. And just in the last sort of couple minutes, I think it's a good time to get onto the fun stuff. So given that we had a great end to the year and a great start to the year. It's obviously been a bit of a ride since let's say 2023. Bitcoin's had a really good run. And now there's that sort of semi-expectation that as Raoul Paul puts it, that we're moving in towards the banana zone. Where's your thoughts on where the market is at, and what I suppose? And I'm not going into the alt tokens. I'm not going into the meme coins or anything like that. But in the sort of top 10, what tokens are you looking at, or do you think are interesting for this next potential bull run?
Yeah, it's been a very interesting few months. And the Australian election over the weekend had nowhere near the sort of impact on the markets that the US election had. But hopefully it makes it a little bit clearer for us to recommend and advise. This is clearly on a no advice basis. We're not licensed to give advice on tokens. But we're seeing a flight to quality, relative definition of quality. But people are moving certainly out of NFTs, altcoins, pump and dumps, and really projects that have utility. So there's the blue chips of I guess investment grade assets that other institutions are adopting. So obviously Bitcoin, Ethereum. I think CME is looking at Solana futures as well. Ripple is obviously a very, very well backed payments network token. Cardano. These are the top 5 globally. I know BNB, which is the Binance token, CZ's making a very big play to try and have that as part of an government reserve as well. So it's really about the top tokens at the moment, plus interesting projects that have got real utility and a real customer base. So I think you're starting to see the tide's gone out. Those that are left naked are disappearing or getting hammered or delisted, and a real focus on projects that have actually delivering some value.
And I don't know if you saw my presentation at the start, but I sort of talked about why I'm bullish on Bitcoin. What's your philosophy for sort of how Bitcoin sort of plays out across the next 10 years in regards to sovereign funds, corporate reserves, and obviously sort of various ETF products, etc.?
I was listening to the token event last week, and one of the more interesting panels for me was actually Jan van Eck, CEO of Van Eck, with the Bloomberg guys, BlackRock guys, and really talking about it from the grey hair in the room kind of perspective. And if the overall thesis was, if there's strong correlation with equity markets, then it's irrelevant. If there's zero or negative correlation, it's a must-have in your portfolio. And that was their institutional strategy. Obviously, from my perspective, there's different drivers of what drives correlation. When it's risk off, it's perfectly correlated with equity markets and other risky assets. When it's contagion, again, similar correlation. But other events, it really depends on what the driver of that event is. And I think you're starting to see portfolio managers construct. I think 8% was high. I was surprised by that sort of adoption. But I think you will, when you start to see a strong zero or negative correlation with other risky assets, then it's going to be a must-have in your portfolio.
And I'll just make a final comment. One of the biggest surprises for me for crypto over this last sort of 2 years is actually the role that they're having in government elections. I was really surprised to see with the US elections how much of an influence the 50 million holders of crypto in the US had. They were ultimately one of the largest backers, of Trump in going to election. And even before that, Sam Bankman-Fried was also one of the largest backers of the sort of Democrats as well. And it's interesting for me watching an asset class like this that's grown to a multi-trillion-dollar value, that's had almost no government support whatsoever, literally until the last until the last few months. So that's where I sort of think, from an investment standpoint, it's pretty hard not to be, to not think about the potential of how big this could grow over the next sort of 10 to 15 years. And that's why I said, I think, although Michael Saylor is probably a little bit more aggressive or bullish than what I would, than me personally, obviously, but his thesis about how he thinks about its growth, when you've got a finite supply of something and just increasing adoption and still at, as I said, early stage, it's really hard to defeat it as an asset class. And then likewise, when you align that with being in its sort of early adoption curve, it becomes an exciting time for anyone that's bought crypto over the last period. I think Michael Saylor has the best saying. He goes, if you're looking at buying Bitcoin, no one ever lost money holding Bitcoin for longer than 5 years. I thought that's probably the best way to look at it. Unless you're a punter and love gambling, then you can have a lot more. Then you can have a lot more fun with it. But so Adam, I just want to say a big thank you for joining us for this session, and hand back over to you, Georgina. Thank you.